Hi, this is Chris Buss with Traders Profit Compass. What I wanted to do as we head to the close here on Election Day, it's coming up on 3 o'clock as I start the video. What I wanted to do is put together some thoughts for the team and any new listeners that are out there for some ways to think about tonight and into the rest of the week. So let's just take it from 50,000 feet. We've got an election tonight where the news will start dribbling in. I expect there to be a lot of overnight volatility. I don't expect some massive crash this week, regardless of the outcome. I don't think it matters. I don't think you can have a crash when everybody is looking at an event. You get crashes when people are caught completely off sides and when nobody sees it coming. I mean, think about Q4 of 2018. Everything was going along just fine, and Powell says we're on autopilot, we're raising rates, it doesn't matter. And then the credit markets lock up, and then down we go. And then into March, although COVID was out there, it seemed far away until it hit home, and then everybody pulled the rug. And again, the credit markets locked up, and that was to a large degree why we got the steep sell-off, as everybody went to cash. No matter what it was, everything got sold. So as we head into the election, if people wanted to be hedged, they're hedged. They've bought their puts. They've got their protection. I think over the last couple of weeks, I think people have liquidated and taken down exposure. That's why we've been, selling off over the last couple of weeks. So and people like me are just, stepping aside. I'm completely flat. So I think people and professional managers have accounted for the possibilities in their portfolios. So I don't think a crash is going to happen the balance of this week. So we've got Powell tomorrow afternoon. There's a good possibility we have no idea who the president is tomorrow afternoon when he speaks. We've also got Jobs Friday, where we get the October jobs report. Recently, that event has been a look in the rearview mirror, and it may move the market to a certain degree, but I don't think it's a massive positive or a massive negative. There may be a reaction, but I don't think it's going to be massive. I can't imagine Powell saying anything other than what he's been saying. We need more fiscal stimulus. We need more fiscal stimulus. We stand ready. All that kind of stuff he's going to say again. He's not going to come out with some massive policy when we don't even know who the president is. I don't think it's going to happen. So where does that leave us? We're heading in with a VIX, north of 35. I didn't look where it was, 38, whatever. If we open lower tomorrow, and I mean just lower, not, catastrophically lower, VIX may hold in there. What I'm hoping will happen is a lot of that vol come out in the next few days, the balance of the week. That'll make directional options trading much less, or more favorable. Let's put it that way, more favorable. Because right now, a lot of my trepidation and uneasiness is trying to make directional trades with options with vol at 38. You could be totally right on your direction and magnitude, but then lose because vol goes from 38 to 21, over the course of the next week. So I'm just stepping aside on that. So what I want to do is go through the charts. I've zoomed out to the daily chart. And what I want to do is set levels that can be triggers for us in the days ahead. Now, speaking of the days ahead, there is, I think, a fair degree of likelihood that the first move is fake. Just like on the FOMC, we've seen it 100 times. There's a knee-jerk reaction, and then the market thinks about it and then takes it the other way. That's not a given. It's just a distinct possibility. So my point in saying that is, I don't think you have to rush in tomorrow morning at 9:31 based on whatever the market does and, lock in all these positions. I think we've got time. I don't want to get into FOMO mode where if, the market gaps up or gaps down, we have to get all panicky and, deploy all our cash. What I want to do is be a sniper, have all our levels lined up so that we can take objective low-risk shots at certain names, certain sectors, certainly the indexes. And I think if we can get great trade location, even if we're wrong, we walk out with a paper cut. That's my goal, is number one, find an objective location, either, to the downside or the upside, where we can take a position, and if we're wrong and get stopped out, fine, we'll just reload at the next opportunity. But I don't want to rush right out. With Powell coming at 2 o'clock, possibly not knowing, who the president is, what the really reaction is. There's 1,000,001 possibilities, and I don't think we're going to know all those possibilities at 9:31 tomorrow. So let's look at the indexes and FANG, and I've got a few select ETFs that I want to take a look at. SPY daily. What the market has done over the last couple days is gotten itself in a much more neutral posture than where it was Friday, testing the bottom of the box. I think all they've done over the last couple days is brought it back into more or less the middle of the range, where it's freer to move and, more of a neutral posture rather than, down here looking bearish against the lows. So I think a real good benchmark for SPY is 330, which is the midpoint of the box. I think you can have a bullish bias above, and I think you can have a bearish bias below. And if tomorrow, I'm just talking intraday trades now, I'll make a distinction when I'm talking about this. If tomorrow you see a break below 330, I think you can take that short and look for 320 and possibly lower into this 318, 315 range. And if you listen to the video I did the other day, this would be a perfect location for a fake breakdown. What I mean by that, there's a ton of stops down here most likely, below the box and, you know, make a run down here to 315, get everybody panicky, get everybody getting short, and then rip it the other way. So this would be a tactical trade for me below 330 to look for a move down towards 320 to 315 and be looking to cover in that area. And then, hey, you know, if it breaks 315, reinitiate and look for 300 or possibly 285. Those were the measured move targets on a breakdown of this box and potential double top measured move down to 285. Now let's look at it the other way. Bull case. There's a lot of volatility, but then either SPY breaks below and then comes back to recapture 330. I think you can take that long and look for 340. If there's a gap higher and it comes back to the top of the box at 340, you can take an objective long there and then look for, you know, all-time highs if the market's going to take off based on whatever it thinks of the election and all the catalysts this week. So I think 330 is a good general pivot point. Above 340 is a definite long. Below 315 is a definite short. And in between, you're trading pure volatility, higher and lower within the range. Let's look at the cues. A lot of lines here, and I'll try to decipher it for you. Same kind of thinking. 270, I view as the pivot point. If it can hold 270, I think you can be long, looking for the top of the box at 280. And I've extended this to include this value region. You can see here we've got a decent sized volume over price bar here, and we've got one here, and that range is 285 to 255, a little bit beyond the narrower range that we have been trading before. So want to be a little bit more careful here. Normally I would say, you know, anything north of 280 you can get long, but you've got a downtrend line and you've got this value area well defined at 285. I look at it this way. If the market's going to rip and we're going to get some kind of a big run into year end, you don't have to go all in at 280 or 285. I mean, if it's going to rip, a measured move puts us easily at 300 or above. Let it take out this downtrend line, and then you can, pile into your heart's content, because then all the potential rejection points will have been taken out. No problem putting a starter on at 280 or 285. I just wouldn't go massively long until this downtrend line is taken out. Let's look at the downside. Below 270, I think you lean to the bearish side, and you're looking, the first target would be a tag of the September lows at 260. Below 260, you're looking for 255, which is the boundary of value. Okay? And then below 255, you move into an air pocket, and then you're looking at the box break target of 240, or a potential double top target of 225. Now, keep in mind that I don't expect a unidirectional move coming right out of the gate. I mean, I'm ready for it, but that's not my base case. My base case is, fake moves higher and fake moves lower in the days ahead, depending on, how information rolls out and things are considered by the market. All I'm saying is on the breakdown move or the move higher, I think it's going to take a couple days, and I would be in more of a tactical mode until some of these boundaries are either broken to the upside or broken to the downside. Then you can take a longer term duration strategic position where, if price takes out all of this congestion and moves above, we're going higher, and probably substantially higher into the new year. If it breaks down, if we take out all this congestion to the downside, take out the 200, come down in here, I mean, we're going lower, potentially all the way down to 225, which is $30 lower. So I will be looking for strategic positioning on the outside of these boundaries, but inside, mostly tactical trading against the levels that we just identified. IWM has been looking the strongest lately, last few weeks. There's a relatively wide range. I could have extended this down to 140 if I wanted to, but there's a gap there. So, if we break 145, we're going to come down to 140 real quick. But anyways, in the days ahead, I think anything north of 160, you can be long. And here I would be not afraid to be a little bolder in your positioning, because there's not the congestion. I mean, above 160 gets price back above this trading range and gives an open path to 167.50. And if there's an inflation, a reflation, a rush to value, it's going to blow through this 167.50 and move into the 170s. I believe the all-time high was like 172.5, 173, something like that, but like 2 years ago. So this has been a long time coming for this index if the value trade really takes off. Now, below 160, I think you got to be cautious, and your downside target would be this 145 area that has contained price for, since July. So if there's a down move, you can be short against 160. Look for this gap fill and then a break below this 155. Then you'd have a free path. And when I say free, you know what I'm talking about. Not a lot of congestion or resistance. You can actually see here there's a relative air pocket below this 152. So you could get a push down to 145 and possibly even a run to fill this gap down to 142, 140 area. And if it loses 140, it's over basically, because then you're coming down into the 130s and high 120s. So that's not what I'm planning. I think there's a good chance that that this value trade revives itself and makes a push higher. Let's look at FANG. Facebook. I think 260 is your is your is your pivot. I think anything above 260 you can be long against, and anything below 260 I think favors a move back down to 245. And if we break that September low, then you're coming to 235 on this big open gap of $10. But on the plus side, above 260, I think you can look for 280. And if you break above 280, then you're going to 300 on the upside. Not without a little congestion here. I'm sure you'll run into resistance at 280, but on any break above, I think you got to run at the old highs at 300. So I think 260 will work well as a like a benchmark pivot point. Apple, for me, it's this 107.50. You can see below 107.50, you've got a massive, massive void here. And all of these people will realize that they're wrong. Everybody that bought the split, everybody that bought the dip, they're all wrong on a break below 107.50. But as long as it holds, I think you can be long. So on any kind of, move higher and then move to back test 107.50, as long as that holds, you've got a good long entry point on the daily. You can set your stop just below. If you're wrong, you got a paper cut. If you're right, you could get a move back up to, 120 or even 130 if the market goes, bananas. But if it loses 107, you got to play it to the short side and look for a move down to 197 and potentially 187 here, where some more of this volume over price support comes in. Tesla's been trading in a very, very narrow range ever since the split. I think you can be long against 390, looking for 450 on the daily. Notice you do have this triangle that's formed, and that'll be some resistance. But if you were to get an entry down here against this rising trend line and against the recent low at 392 or 390, that's an objective place to get long, and then look for upside towards 430, 450, and possibly higher on a big breakout. But if you lose this trend line, you got to get out. You got to get out fast, because you're coming back to 330 on a break of this uptrend line, in my opinion. And notice that even though price has been the same, momentum's been coming out along with RSI. So there isn't, we don't have any bullish divergence to help us on the upside. So it's just going to rely on the price action here, and if it can hold this 390 level on any kind of down move. You can see all the moving averages coming together, and price starting to emerge just above. If it can blast through this downtrend resistance and clear 450, then you got an open path to much higher prices. At least test the old high at 500, and most likely higher if the rest of the market is going to run. Microsoft, for all intents and purposes, the trading range is from about 217.50 down to 202.50. It's a little messier chart. We had an undercut here, and we had prices below here. Here was a fake breakout, and here was a fake breakout. But if you can anchor along, if you were to get a move down to 196 and it held, I think that's an objective long where you could set a stop just below and then look for a move back up to 217.50, and then possibly on a break above this downtrend line, get long for a run back up to 235. If there's a bunch of indecisive action after the election inside the box, I think you got to sit tight and wait for price to move to an objective level. For instance, it chops around. If you get a breakout here above downtrend resistance in 217, take it long. If it comes up to the top and looks like it's going to fail, you set up your short with a stop just above and look for a move back down to the bottom of the box, and possibly lower if this were to break, come down to 196 and then 190, which was the original breakout, and where the 200 comes in. That would be, if you anchored a short up here and you got down to 190, I'd definitely be covering that. And then if it breaks the 200, then you can reinitiate. But there'll be a lot of dipsters at 190 and the 200. You can bet on that. So I'd be covering if you got a nice sharp move off the top down to 190. Amazon, big trading range from 29.50 to 32.60. Fake breakout. The result of those fake breakouts were back to the bottom of the box, like we've been talking about. After the election, if you got chop and you come back and you hold this 29.50, you got yourself a good anchor point for a long, for a run back up to the top of the box at 32.50, 32.60. And then if you got the breakout, then you're going most likely to 3,600 or even higher if the market goes bananas. But two scenarios for a short setup: chop, come up here to the top of the box and fail. You can get short there with a stop just above and look for a move lower, or chop, break the bottom of the box, and then much lower, because this is a, what is that, $300? $300 move from 29.50 is going to put you down, in the 26s or 2,700 area. You would most likely get some support here at the 200, but anything below this 29.50 is real trouble. Google's been doing well. If there was any turbulence that came back here to backfill this gap but held 1540, I think that's your long. And if that 1540 were to fail, I think you're going to 1425 at the bottom of the box, because that would look very similar to this fake breakout where it re-entered the box and went to the bottom immediately. This too would be a fake breakout where if it re-entered here, you would get the move down to the 200 again. So in my mind, this 1540 area, 1550 right here, is your bull bear pivot. And then, of course, anything that broke out to new highs you got to buy. So if it were to pop this 1725 area, that's a definite long. Netflix, bottom of a giant box. I think as long as it holds this 470, you can be long and look for a move back to 560. But on any break, you're looking way down here. You're looking potentially for 380. That's a $90 box. 90 from 470 is 380. So you're down here where this technical support comes in. So for me, 470 is your bull bear pivot. Let's look at some of these ETFs. Semiconductors, we've got a huge bar right here at 172.50. For me, that's the pivot. If any kind of turbulence that holds 172.50, I think you can be long and look for a move back up to 180 and hopefully a breakout that would take you back up to 190. If we get a breakout in the days ahead that comes back and holds 180, I think that's also a place where you can be long. A great short setup would be a move above and then a move back below where you can short against 180 and then look for a move down to 162, 162.5. And then, of course, if there's any break of 162.5, then you're looking at least 150 if there turns out to be a big problem. But inside the box, I think your bias is long above 172.50 and your bias is short below with an eye on the September lows. Solar. This may be, more of a direct election play. If Biden were to be elected, Green New Deal, all that kind of stuff. I think you got a perfect spot right here at 67.50. As long as that holds, I think you can be long, but there is a massive void down below. If it loses 67.50, it's losing $10 almost immediately, the way I see it. There's nobody home right here. And even, if it went that far, I wouldn't be surprised if it came down here to 50, because once that builds up a head of steam, I'm not sure that 57.50 would hold it. And that makes sense from a TA standpoint, because you've got the 200 coming in here that will be, by the time that happens, probably be here as a second layer of support here at 50. So I think bulls are in control above 67.50, but I think that tide turns quickly on a break below. I have no idea how much of this run-up has to do with Biden or just secular tailwinds behind solar. Hard to tell. Just key off of 67.50, and of course anything above 77.50 is a buy on a breakout. Notice how strong the RSI and PPO have been. They haven't been below their midpoints and since March. So very strong sector. I haven't put a ton of time into this marijuana ETF, but if Biden gets elected and there's some massive national legalization, decriminalization, or whatever, this thing has taken a beating over the last 3 or 4 years. And I don't think we need to catch the lows, but I think it needs to be on the radar. It's not a clean setup. I mean, here you can say get long over 14 for a move to 16. I think if you broke out above 16, you could find 21 pretty fast. So, you know, I think 14 is a good level to alarm, and I can't see it, you know, really falling apart. I mean, it's been beaten up. It may come back to $9 for a back test and a double bottom. And if you got that, might be a good place to anchor along at the, you know, all-time lows if you wanted to take a flyer and just wait. I'm not sure if there's been enough of a base for a real breakout yet, but I think it's worthwhile just to keep on the radar. XRT, equal weight retail. I want to be a buyer on a recapture of 53 and a seller on a breakdown of 49. Big void right here from 49 to 45 back down to the 200. So between 53 and 49, I think you got a lot of chop. But if there was a breakout, I'd be a buyer. If there was a back test of 49, I would be a buyer at support. But below 49, longs got to get out, and then shorts take control and most likely push this down to 45. Housing. We put some time into this over the weekend. You can see the run up and then the quick rug pull back test to 52. I think there's a zone here between the February high at 50 and then this 52 level. I think that's a zone of support. I think as long as 50 held, you could have a bull case for housing. Certainly as long as 52 held, I would be a buyer there, looking for a run back up to 60, but below 50, you'd have to do a rethink on housing, and it would not look good technically to lose the February high. So that zone of 50 to 52 needs to hold. Regional banks, if you see a breakout in IWM, you're going to see it here as well. Actually, it's already taken out this 42 level. I think as long as it holds 42, bulls are in good shape. Looking for 47. Above 47, if you didn't catch this move or you got sidetracked or missed it or whatever, buy a break above 47 and then look for 60. This was a $60 stock a year ago. Well, maybe a little more than that. 2 years ago. If rates start running and that inflation trade kicks in, there's no reason why KRE won't or can't make 60 again. And I think breaking back into this value range above 47 is the key. So don't panic if you miss something in the next few days, but certainly set your alarm at 47 and then set yourself an alarm at 42. If that were to back test and hold, that would be a nice long where you could set your stop just below. Let's look at bonds real quick. If inflation starts to run, bonds are going to fall apart. And here you can see that price is wrestling with the 200. We do have a swing low back in June at 154. You'll probably see some turbulence in the days ahead, chopping around between 160 and 156. If you got to move back up to 160 where it's stalled, great anchor point for a short with a stop just above at say 161, and then look for a move down to 154. If you don't get that kickback and 154 fails, you got to get short there because nobody's home. Nobody's home below 154, and I think you would see a pretty fast move. And that's with, rates going over, the 10-year going over 1% and really, starting to run away. You might even see the Fed do something if they saw rates running away. But I think that's the trade. Now keep in mind, short TLT is a very popular trade, and I tried to get short right in here, and of course it reversed right back, stopped me out, and then came back right to where I had bought it or sold it. So that may be an interesting trade, and we'll just have to see what rates do. But on a break of 154, not a lot down here unless you count this, March craziness. More of the regular trading, that there's nobody down here. And then lastly, let's wrap up with gold. We had been watching this, did not pull the trigger at 175. We were looking for 174 for a touch. Apparently got close enough, and now it's, bounced up. I think 180 is your pivot point. Break above 180, you can get long and look for 186, and then possibly, 193, 194, 195. But a lot of consolidation, and we've got consolidation between 175 and 180, and then we've got consolidation between 180 and 185. I think this 180 is a perfect midpoint to have a long bias on a break above. So I like that. So that was a quick run through of some major names that we've been tracking here almost on a daily basis. Let's just recap quickly. I don't expect a massive rug pull. I do expect a lot of overnight volatility and volatility into the FOMC. I'm viewing any potential morning move and then move after FOMC as potentially fake. Going to stay very tactical while price and volatility thrash around within the range. But if price moves outside the range, either higher on a breakout or lower on a breakdown, I think we can more confidently take a duration trade, more than 2 days like we've been doing on these tactical intraday and real short trades. I'm hoping vol comes out of the system, so it'll make our directional trades more favorable, cheaper, if you will. And then we can look towards the end of the year if we get some clean breakouts that hold, then we can get long and look for a run towards the end of the year. Or if there's a fake move higher and then they all of a sudden flip around and sell it off, then we can look lower and have our short trades in place. I encourage you tonight and into tomorrow. Obviously, I don't know what you've got on, but make sure you know your levels, where you're going to get out, etc. Or if you've got names in your crosshairs, where you're going to buy, and have those alarms set, because when it gets crazy, you will never remember. You got to have that alarm ready. And if you're a dip buyer and we get this big fake move down and it comes into your buy zone, you can pull the trigger with your stop just below, and see what happens. Just stay very objective. Don't throw darts in the middle of the range, because in this high vol environment, you're going to get whipsawed to death and you won't have a good line to shoot against. I think in this environment it's paramount to get as good a trade location as you can possibly get, and then you can set your stop on the other side of that line, and for sure if it gets hit, you're wrong, and you get out immediately. You don't wait and hope. You just reload and be ready for the next the next objective trade. And one other thing, in this higher volatility environment, if volatility doesn't come out of the system, trade half size. You don't have to go, max normal position on every trade. If you're getting the vol, you can make just as much money on a half size position as you would on a full size, but you won't be as nervous because you got half as much at risk. So don't be afraid to cut down on your position size, and that will keep you more centered as a trader and not panicky when you see a bar here and there that go against your position. I think that's a great way to approach higher volatility environment. And that's the thing I'm going to be watching the most. How fast does vol come out of the system, or does it persist? And if we see VIX 35 holding in there, then a lot of my thesis is probably wrong, that there's something else out there that the market is worried about, whether it's who is the president or whatever the case may be. That would be a warning flag for me, is vol hanging in there above 35 and not coming out rather quickly. So let's wrap it up there. I hope the thoughts helped you. I'm not going to trade anything tonight. I'm just going to watch. I'm not going to try and get involved with futures and try to do that. But if you have a futures account, don't forget about those micro minis, and 1/10 the size of the big boy contract. That's a great way to get some practice in a high volatility environment. If to get more comfortable in that, trade one micro mini. I mean, if you honor your stop, it's hard to get really hurt on a 1/10 size position. That would be some great in the chair in a high volatility environment, with everybody and their brother trading, great liquidity. There's going to be some wild moves, so you got to be prepared for that, but that's all part of the learning process of, finding yourself in that environment and getting used to that in your trading. I think it would be great practice if any of you have, those futures accounts set up. Just go really, really small and set up your trade plan, and then see how you do. And then you can recap it tomorrow and in the days ahead. And I'm sure you would learn a lot by doing that. But as far as I'm concerned, I'm just going to watch it and see how it unfolds into the morning. So If you're new to the channel and you found this information helpful, please subscribe and hit the alarm bell. I'd really appreciate that. Then you'll be notified every time I publish new stuff. And over in the show notes are convenient links for you to visit the blog site. A lot of good information there for aspiring traders at all levels, and a place to register for my content where you'll get a nice email each and every time I publish, so you'll stay completely plugged in on the markets and what I'm seeing. So anyhow, this has been Chris Buss with Traders Profit Compass. Have a good night of trading if that's what you want to do. Otherwise, I will talk to you bright and early tomorrow morning as we always do. Talk to you next time.